What's up, everybody? Faith in the Strap. Another ICT day review. It is Wednesday, February 1st, 6:29 PST. All right, we actually gonna do 3 days. We got Monday, Tuesday, and Wednesday. I got a little behind. So we got NY off of open AMs. We had the kill zone. Right before kill zone, we made this low that actually ended up being an equal low. Now coming up here after breaking out of NY kill zone, you can see we was already, look at that, more than halfway through London. So that 50% could have been an easy level to expect price to continue, especially after taking out all of this sell side liquidity. But you can see we ran here. And here, where we set up a lot of, these weren't equal lows yet, but these low pivots, you could have saw this was sell side liquidity ran. This is new sell side. And these are lows that we just kept stacking. So if you notice, we're just stacking, we're stacking. If you look, this is all just a giant trend. It's important to notice these because you can play these very easily. They're really, if you're a strategist, just a TTO, but understand that this trend is caused by retail. It's our buying and people with the money letting us buy like that. So we come to here, we broke out, right? Here, I didn't even notice this, but this was a low risk buy. Actually, the homie Soul on Twitter, Soul Trades, he was the one who pointed that out on his page. So we had a breakout. We had a deep retracement past 79% into this order block. So into this order block that pushed us up. Look how deep that price was. Boom. So stop wouldn't have been that far off. Then we ran up and we rejected this level. Now you might be asking, what's this level? And this is why it's so important for you guys to pay attention to the higher time frame, because you guys start trading this shit and you get stuck on the fucking 1 minute, and then you be like, oh yeah, it's a 1 minute order block. Yeah, it's a 30-second order block. Yeah, it's a 15-second. Yeah, the 2 minute. And I'll be like, bro, shut the fuck up, because I'm focused on these higher time frame objectives. So if you see, the dotted line is abundant formation, and this little gray box right here is actually, when we go to the 2 hour, it is, boom, breaker block setup. So actually it wasn't a breaker, it was more so a mitigation block than a breaker. But price ran through and the highs weren't taken. So I would consider it more of a mitigation block, because yeah, liquidity wasn't taken above. But huge mitigation block that we came right to. If you look right there, top ticked it, literally 2 points, 1.5 points. So imagine getting in short there if you'd have just paid attention. That's why it's very important, you know, to try and pay attention to some of these higher time frame objectives and targets, because price is going to draw to those higher time frame PD arrays more than anything else. So coming back here, we have obviously the fall. Now, if you notice this fall, there was no imbalances left as we're falling. So usually when I see that, that tells me that price isn't going to draw in, and I'm likely to have a breakaway. So there was no clear entry until here. Here would be like a very late silver bullet entry. Then we make the imbalance here. So I'm always looking to see when we make an imbalance. We hit this low, and this actually became a smart money reversal. There was divergence on NQ and YM. So boom, did that little move, bounced. Now here in lunch hour is where what happened. We end up running the lows. So if you're in my Discord, Oilyboyz, where I'm live trading every day, 5 days a week, I always tell you guys what, the moment we have lunch, what do? I tag it and I yell it out, you know, on the call. I let everybody know, because here is where I expect volatility to die down or a major trend change to happen. So what happens during the lunch, we make highs, we sell off, boom, fair value gap. There was an entry, but this is a lunch entry. So you have to know price isn't going to be that efficient moving through lunch. But as we're coming down, we make a 5-minute fair value gap. Always pay attention to these gaps we're creating. We come down, and like always, we sweep the lows. So usually right after lunch, you have a very high probability of two outcomes. First, if we're going to sweep highs or lows. Second, whatever leg we make, this very strong and obvious leg is going to continue. So whatever leg is made after PMs, you have a very high chance of it continuing. So once I saw us sweep the lows, sell side liquidity, what did we do? We came up. What did we run through? Buy side. Straight through buy side. Same thing happens. And look, there was the shift of character. Break of structure, whatever you want to call it. Now, technically, there was no break of structure before, so this would be a riskier take. But we did create, a FEG like right there. To boom, off this high, you could have had an entry. It wouldn't have been technically OTE, but you still would have had like a little 2-minute FEG right there. Now, the best bet, to be honest, would have been to wait, obviously, till price drew into this. Or you could have maybe took a strat reversal, but I know like ICT wise, it's kind of risky because if you're playing futures, we could have came up like that and then dipped lower and stopped yourself out. So unless you wanted to leave your risk, like maybe something like this. But in my opinion, this is just, unless some traders are like this though. If you're a 1-to-1 trader, that's fine. But me, I always try to aim for 3-to-1s. That's why sometimes I'll miss trades. Now we came through and made a balanced price range, right? What do we do? Tap this 2-minute fair value gap, dip down, shot right through it. So I'll always notice that whenever we make a BPR, I'm always watching to see if we're gonna make another one. Because usually we make a BPR and then we make another FEG. Boom, drop down. Now look, notice that price came to this imbalance, which is also sell side, sold off, came back, grabbed more fuel into this imbalance, dropped. Where did we drop to? External. Look at that. This is external range of liquidity, major external. So understanding that early on, which is why it's so important to have those higher time frames, you could have realized like, hey, we just swept all of this internal. The only other one to sweep is here. So this would have been your next target. So coming back, you could have took this to this one and to that one. You should expect that price to come to draw past that because we've already taken buy side. So there's nowhere else really for price to go but down. If you did that, we're going to put our risk at the top of the FVG as opposed to this super tight one. Because I don't like when they're too tight because you getting stopped out and missing a move is annoying. This is a 3-to-9. This is 6.8. So there's your R's. We obviously continue this trend and realize every time we have a trend, that just builds up trend line liquidity. Ran it all the way down to the end of the day to close. Easy peasy. Now we look at Tuesday. What happened Tuesday? Now, you know me, I always like to mark each market. There was Asia, sideways. London made a low. Then we dipped here. NY. Where did we dip? What is this? This is why I tell you guys the importance of higher time frame targets and PD arrays. We dipped into that. Daily order block. Then this is Tuesday at 3:35. There it is. My bad, y'all. I get lost in my own charts. Right there. Boom. Dip right to it. So this is a much older daily order block that has been stuck on my screen. There we go. Boom. Well, realistically now it's a breaker, but order block, order block's an order block, right? But notice how we came in and we just tapped that level. Bing. Jumped up. So came to that level, never came back. So that should have told you during NY, once we got to 50%, once again, but just to be honest, think about it. That's always like think about it. If we're taking the lows, I'm always, when I trade ICT, I'm looking to my left to see what do I have to take out. Do I have more highs or lows to take out? If we're taking out all these lows recently, right? Because we took out these highs and now we're taking out low. What's more likely? Price to continue down? No. What's likely is price to come back and now take out some of these highs, because price literally is doing what? It's taking out highs to lows. Or for us traders, it's expanding the range and making a broad information. So when I trade ICT, I'm always cognizant of this phenomenon, because no matter what, it's happening. There's always BS being created. If you look here, there's already a broad information in between the two. And my chart always has a broad information. Once again, coming to AMs, this session I didn't trade as much, but understanding major higher time frame PD arrays, daily order block, London high, came back down. What did we tap? This volume imbalance. We've been using this 4-hour balance, volume imbalance on ES for now about, I say like 2 weeks about. And you can't see it here because it's the quarter. But when I go to ES1, you can see it perfectly. There we go. Boom. Same volume imbalance. Very, very highly reactive PD array volume imbalances. So even before I traded ICT, I always used volume imbalances in my trading. I'll use the volume profile. Now I can just see it with my naked eye, so I don't have to worry about it. Now, coming into the lunch hour, what happened? Broke out. What happened? We made a leg up. So this lunch hour surprised me because we pushed up. I was expecting us to sweep these lows. We didn't. We only swept this low. But it's okay because sometimes you have to be dynamic with your trading. We swept those lows. What did we have? Boom, 5-minute FVG. I remember this one too because I didn't trade it. And I think I took this one. I traded this and I cut. We came down here. Once we came up, I was able to catch a long because all we did was make another BPR and dip below. So if you see a gap, you can't really, like, even for me, sometimes I trip, you can't like get too upset over missing because price is likely to draw back to it, either the same session or next. So, once again, this run actually was like one of the better trades of the day. It's 25 points. Could have put your risk the bottom of the swing low. What highs do I have to my left? I'm always looking to my left for my targets. So yeah, we had tons of targets to my left. So yeah, boom, right there. Perfect target. I like to use targets like when I'm back testing or looking back that were to my left, because like you can't use the full target because you wouldn't have guessed that because price hasn't drawn to that yet. So how would you project that? But still, that's an 8R. 8R and PMs, best trade. All right. Now, the day y'all really want to see today, FOMC. This day was phenomenal. This day was nuts. Had a lot of drama, but we still tried to do our best. All right. So coming into FOMC, we're expecting news. I'm gonna keep it real. I don't pay attention to the news, so I had no idea what the points were. Didn't care. Don't even think about them. All I cared about was liquidity, and the levels. So coming in, I think it was around 7. We actually had data. I forgot what it was that we had, but we had data at 7 that moved the market. So I was actually trying to take a few trades before, but they were just light scalps and they were on options outside of the SPY. But I knew the biggest move was going to be obviously trading, trading the ES and trading FOMC. So, like I said, that's what we had. We had job openings, Jolt's job openings at 7 or 10 Eastern. Boom. So I always mark my news candle. Mark my news candle off. Also mark my equal lows. Coming here, we made this high. Since we had that, I marked this as my buy side liquidity. We came down, I missed this whole leg. This one, actually, I wanted to go back and see what happened because this one was a good block, a good trade. So I missed it. I was expecting a retracement, but looking here, this is a key setup, to show you that you're probably not going to need a retracement. And technically, price did retrace a few times here. There also was this block here that I probably could have took, especially off this aggressive move. This aggressive move, I probably should have took this candle. Let me look at the one. Yeah, so off the 1 minute, that aggressive move right here, this could have been like a propulsion block, I guess. That would have been perfect entry. So, even though I missed on the 2 minute, that was my entry, which that's why it's good to do these because it helps me too. I see everybody expects the 2022 model. We all expect this. We all expect something like that, right? Oops, I drew it wrong. What is it? High swept, imbalance, low displacement, boom, something like that. But this one, really what happened with this one, all we did was kind of turtle souped it, slight high, major drop. That was the liquidity built there. So it didn't need to retrace. That's one thing I've learned from my other mentors who teach me and like kind of the side stuff I learned with side money, smart money, I mean. So that trade, obviously, if you put your risk to the top, and a safer one would be these highs. That's one thing. If you're trading futures, especially, you have to learn, you have to have wider risk, or you're going to get stopped out nonstop. That shit is infuriating. This is just the fair value gap, though. Same 5 minute fair value gap from the day before. Look at that. Targeting the lows or even the highs, because price at bare minimum is going to mitigate it. You don't know if it's going to fill it, but at bare minimum, 475. 5.3. Sorry, hold on, mentees. All right, came down, obviously, jumped up out of the gap, and pushed up. Now, this was a choppy move. I probably wouldn't take this up, to be honest, just personally. It's just me. Price consolidated here, buy side liquidity was made. Once again, we dropped. Look, another one. So actually what happened here too, this FF, we actually had a fair value gap that we had old fair value gaps that got filled out. So whenever I put FF, that's literally what it really means. So there was actually one here. Anytime I have major fair value gaps that get filled, put the FF. Now, once I came into lunch, I was more alert because all this I wasn't really trying to trade because it's FOMC. I was ready for the bigger move. Now, during lunch, my goal was to get as low as I can to take longs off of the move because I was expecting price to go up and continue, but really what happened, we chopped. So I ended up taking a few trades here, but then I ended up getting a good long here that I ended up selling here. On futures, though, that's a good move. And then I ended up catching this to that. And finally, I think I caught this move right before the dip. So I wrote this like right to the top as it was coming down, I ended up selling. Now we dipped. Now this is right when what's the name was going to start talking. So I obviously wanted to be flat. So I was flat. Price came, into the old FVG. Like always, I had to obviously play it safe. My bad, y'all. I had to obviously play it safe. I waited for price to start reacting. We ran up. Where did we run to? Midnight open. Dipped down. So like when price was doing all this, I just sat flat and I kept putting it on. I'm flat because these moves are just too fast to react to for me. If they're too fast for me to react to, most of y'all probably shouldn't trade that. What happened? Price came down to a crucial level. So this one actually got me. I didn't realize, and actually one of the bros in Discord pointed it out. We had a 4-hour volume imbalance. He didn't even, the cold part, he didn't tell nobody. He just traded it. That's cold. That's crazy. But when you zoom out, boom, it was right there. So this was on NQ. It wasn't on ES. ES did not have a volume imbalance here. ES had that other volume imbalance. But understand, since these are highly correlated, price is going to move similar. So that's why it's important to chart ES, NQ, and YM. And that's why you see me, I chart all three almost every day. Another thing I noticed, when we made that low, where did we go to? We made an equal high with this old level, but also this. So this is actually something special. I don't really talk about, but just understand these get you that this happens a lot in the market. So if you would have known about these, man, you could have got a really, the best entry out of anybody. So coming off the news candle, at this time I had major drama, so I missed it. Once we came, honestly, like this is a momentum speed play. Once we made a low and then we started coming up above this, it's almost like you just have to really just get long. Especially once we came through this FVG. That should have really told you because we didn't have 1, 2 major dips through it. This trade went over 100 points. This was crazy. So I had some drama happen as it was happening. So by the time I looked up, running a Discord and running everything, we were up here somewhere before I entered the trade. But I was like, even though the sky was falling, I was like, I'm gonna take advantage. I saw price come down, tap this BF. I ended up getting long, scalping to here, sold short. I mean, not sold short, cut it, caught long. I just basically kept taking every TTO leg. I literally right here, I think as it was coming down, I just cut it. I looked at the timer, it was like 10 minutes. I thought it's unlikely we make another leg up. Even if we do, it's gonna take too long. Like, these are 1 minute candles. So 1, 2, 3, 4, 5, 6, 7, 8. So you know what? I cut it. But that was 3 fire trades. And that was my day. And that's why, like I said, it's so important to use PD arrays. It's very important to use higher time frame targets and just larger, understand the larger range, understand magnitude. If you look here, look what we did. All we did, this was Monday's high. This was Asia's high that we actually ended up tapping into. That's all we did. Well, just understanding the basics. Look at that. Tapped Asia's high, sold off. Also near the news candle. Boom. Tapped Asia's high, sold off. Boom. 313. All right, y'all. That was a quick one. I'm gonna upload this and y'all take care.